Hi there, Michelle Marsden of Marsden Accountants, and today's budget predictions. Hey, it's budget's not far away now. If you're not watching this on my YouTube channel, could you please subscribe, because that'd be really useful for me. So yeah, www.marsdens.co.uk/YouTube. And today's predictions. Well, today I'm going to talk a bit more about property, actually. There's a lot of work to be done in property. And one of the things that before Christmas that Rishi was highlighting was a little bit of a future plan is capital gains tax. Now, they've only had a couple of months to look into capital gains tax potential changes, but it might be one of those things where they're thinking actually people have been selling houses because that's what they wanted to happen. But people have been selling houses as well because of the Section 24 interest, and a few landlords are starting to see the impact of that and think, oh, this is expensive to hold on to this property now because I'm a 40% taxpayer. Not sure I want to do this anymore. So they might bring that in at the budget this time. That might be sort of like, or hinting at the changes, but I think it might be time to bring it in. Currently, it's 18% and 28%, depending on what rate taxpayer you are. And there's a nice annual allowance. Now that's £12,500. So let's hope that doesn't go, because £12,500 at 0% is nice, you know, if you're selling a property. But it may go. Hope not. But anyway. So yeah, so there's a couple of things they can do there. Last year they took away the letting relief. Now nobody made a big thing about that. For some clients, that's huge. They've lost lettings relief, which are up to £40,000 at their tax rate, which is a lot of money lost. But that sort of disappeared, you know, went through. So they might do something a bit more underhand, maybe, right? Because most people don't worry about capital gains tax until they sell. But I've noticed that actually quite a few more people are having to pay capital gains tax now. So there's, you know, there has been more and more people who've been buying properties to do up or to rent out for a few years, and then they are having to pay capital gains tax. So there has been an increase in that. And don't forget, if you do have to pay capital gains tax, you have to do it in 30 days as well. So anyway, sorry, I'm going on. But yeah, I think the rates for the capital gains tax, that's one thing. The annual exemption limits, that's another thing they could maybe look at. They could just go for a bit more of a total revamp of capital gains tax, really. It's all about making profits on gains, really. That's what capital gains tax is for. It's to make a profit between what you buy something for and what you sell it for. Yeah, it's okay if you live in it all the time, that's fine. You don't pay any gain on that. But the minute you start renting it out, then you basically can go into some sort of gain. So I think rates is definitely one of them. And I think there may be future there actually to bringing it more in line with the 40% band or the 45% band. See, people still think it's 40% anyway, but it isn't. It's actually 28%. So because that was brought in from a rule a few years ago, you know, to appease people at the time, but people have forgotten about that. So that might be where they start moving with the capital gains tax on the properties. So there's lots more predictions to do with properties, but I can't fit them all in. I'll be here for weeks really, but yeah, I think that's a biggie because it's already been muted back in December. So yeah, watch this space. Time to shine.